This will be my last video covering Jay Morrison in the Tulsa Real Estate Fund. At this point, it's safe to say that the fund has grossly underperformed. But I saw something interesting the other day on Jay Morrison's Instagram, where you have individuals that are trying to compare TREF's dividend to Apple's dividend. And I believe that this is just absolutely disingenuous, it's manipulative, and it's just not an accurate depiction of what's actually going on. When you take $500 and you invest in the Tulsa Real Estate Fund, you are essentially buying a subscription to the fund. Then what you have to understand is that those 10 shares that you receive for your $500 investment, there is no public market that you can actually trade those shares or sell those shares. The only way that you can get paid on that $500 investment is when the fund manager declares that he can pay out a dividend. Now let's compare that to Apple's stock. And let's go back to June 1st, 2018. And the reason why I'm choosing June 1st, 2018 is because that's when the Tulsa Real Estate Fund launched. Back in 2018, June 1st, Apple was trading at $46 and change. Today, Apple is trading at over $120. Why is this important? Because if I took that same $500 and I put it into Apple stock, I would have more than doubled my money because the actual value of the shares has appreciated over the past 2.5 years, on top of the fact that you would have received your dividend. Now, let's make a fair comparison. Let's compare TREF to a REIT, like the Realty Income Corporation. It's a REIT. They've paid a dividend to the tune of $2.81 last year in comparison to TREF's $1.76. But here's the great thing about the Realty Income Corporation. They pay dividends on a monthly basis. They have paid a total of 606 consecutive dividends to their investors. And again, you are investing in an open, liquid market that you can get into and get out of whenever you want to. Once you look at the fact that you basically received about 3.5% on your investment, when you factor in inflation and you factor in taxes and the fact that this is your first dividend after 2.5 years, you basically didn't make any money in real terms. And then many of you who actually have received your redemptions, the fees are so high to the tune of 10% or 11%. When you actually factor that in based upon the trajectory and the growth rate of the fund, let's say that they're making you 4% every 2.5 years. That means that it would take you 7.5 years of dividends when you cash out to basically break even, right? Because if he's charging you around 10%, 12% fees to get out of the fund, then it would take you about 7.5 years of dividends to get to the point where you can actually even get your $500 back. And if you don't believe me, you can go and watch a video from Tanisha. A link to that video will be in the description below. Follow me here. She invested $2,000, and because she did an early termination, she got back $1,771 because the way that the fees are structured. When you look at this fund, I've been saying this from the very beginning. It's not that the fund is a scam. It's the way that the fund is structured. The fund manager is going to receive a 5.5% management fee, him and the partners, whether or not if the fund performs or doesn't perform, basically at your expense. Here's what we know right now. After 2.5 years, the fund manager has received, or the management team and the partners, they've received a total of $600,000 in management fees. Now, we still don't know who these 4 partners could be. It could be a case where maybe Jay Morrison's all 4 partners. Maybe his wife's one of the partners. Maybe it's a family member. Maybe it could be a situation where it's like, hey, J1, do you think I deserve a salary today, J2? Pay self. We don't really know. Then we found out that you have TREF, which is the parent company. And then because Jay is a serial entrepreneur, there are other companies that Jay Morrison is affiliated with underneath the TREF umbrella that's doing business with and for TREF. Is he getting compensated from his other companies with the inter-marketing agreements and the sister companies? Because then that would look like you're double dipping. These are questions that you, the investor, should be asking him on these calls that you have so that we can have a clear understanding, because he tried to sell you the idea, king and queen, that he doesn't receive a salary. So who got the $600,000 in management fees? And are you being compensated from these intermarketing agreements? It's very easy to arrive at the conclusion that this just isn't a good investment. And then when you go back to the REIT that's paying you on a monthly basis, you can deploy a drip strategy, where investment strategy, where you can take the dividends that you're receiving and constantly keep reinvesting them back into the Realty Income Corporation, where you can basically start, compounding your money. You can't do that with TREF. See, this type of investment vehicle is designed for people that actually have large amounts of wealth. So if you have $100, $200, $300,000 and you're compounding your dividends over an extended period of time, you will make a lot of money. This type of investing isn't designed for people who only have $500. It just doesn't make any sense. And as I said in my previous video, you then have to also factor in the opportunity cost. Basically, if my money is tied up in this fund for the next year, and I could have had that money invested in some FANG stocks like Facebook, Apple, Amazon, Netflix, Google, or Tesla, or medical marijuana, or crypto, you're literally losing out on thousands of percent gains because your money's tied up in an illiquid fund that you can't get your money out of. And they're trying to sell you somehow that because you finally received a dividend, and we don't even know how he was able to pay out this dividend, which will be interesting once the actual SEC report comes out to figure out what asset did he have to liquidate, or how did he even come to the point of being able to make up the $1 million plus that they were in the hole for. So I'm going to fall back and not continue to keep making these videos and beating a dead horse. It just doesn't make any sense. And then when you take a step back, I owe my subscribers and my students in the academy more. We're going through the fourth industrial revolution right now that's going to be spearheaded by technology. We're moving into a cashless society, into a digital economy, and crypto is going to be at the core of that. And I just think that my time and energy and effort will be better spent there than constantly beating a dead horse. It just doesn't make any sense. But what I find odd is that for someone who claims to love black people so much, he seems to always be in conflict with other successful black men, whether it's him and Tony the Closer, whether it's him and his previous business partner, Will Roundtree, now parting ways, even if it's Roderick Stanback, who's on the actual JMA documents. At a certain point, if you constantly keep having altercations and problems and falling out with other people, it's pretty safe to say that you are the problem. And when you deal with these hoteppers, back to Africa's red, black, and greens, B1s, their idea of black first is allow me to manipulate and abuse you first before the white man does it. That's their idea of black first. Let me abuse you first. Let the black man be the one to get over on you, not the white man. And I just think that is disgusting. So you have to keep these things in mind when you're dealing with these individuals, because somehow they believe that, because you waste your money at Popeyes or you buy Jordans or hair weaves, that your money is better spent in their pocket than you consuming goods and services for yourself. So you definitely need to make sure that you keep an eye out for people who start to use that type of rhetoric against you. It's very, very important. And when you look at the way that the fund was marketed towards you, where they were using Tulsa and invoking the ancestors and talking about Black Wall Street and talking about gentrification. These are, issues that are plaguing the Black community. And the whole marketing was designed to get you emotional and not really allow you to look at the investment just from a pure numbers standpoint. It just doesn't make any sense. It's designed for him to basically pull together 13,000 of you at $500 a pop and basically just milk the fund and do a couple of flips here or there and say to you, hey, look, I gave you 3%. Meanwhile, you could have been putting your money in so many different investment vehicles and making money. At a certain point, you just have to call a spade a spade. Yes, you should do business with your people. Yes, you should believe in group economics, but then it should be group benefit. It shouldn't be one person is swaggy, one person is rich, and then they hear every now and then they say, well, here, take a little 3%. That's just, that to me doesn't make any sense. We have to elevate the level of conversation. But in my 2 years now of being on YouTube, what I've begun to understand about myself is I am a coon. I am an agent. I am an Uncle Tom. If people like Jay Morrison and Umar Johnson represents being an alpha male, if they represent being pro-black, I don't want to be that, because I can sleep comfortable at night knowing that I don't owe anyone any money, that no one's looking for me, that I didn't overpromise and underdeliver, that I didn't create, an investment vehicle where I win at the expense of others. No, I feel good at what I do. Many of you who've been partnering with me and building with me, many of you are performing extremely well in the crypto markets. Many of you are getting involved in different business ventures, and I feel good about that. So if that's what being a coon is, I'll take that all day long. At a certain point, we have to just accept the fact Garveyism is a failed ideology. It does not work in the 21st century. Fact. If you are a person who you're investing in a business based upon the fact that it's a black business or a black opportunity, and you don't care about the numbers, you just want to see a black man win, great, good for you. But understand that that's not investing, that's charity. And at this point, if you're investing in a Tulsa Real Estate Fund, you essentially gave the fund a donation.